quick flow show today. First day back for me. My kids don't go back to school until tomorrow, so I'm doing that. First day back, playing catch up business. So not going to go over too much of this historical stuff that's been over the holidays, though we will look at some of the price moves going on. What I'm really been looking at this morning, first and foremost, is just some of the themes that are coming into the trading today compared to what's happened over the holidays. We have seen some funky moves. One of the big things I've really looked at has been yields. We got that late year run up 3.9%, and then as we've come into the new year, that's all the air's coming out of that tire there. So on the headline front, just been really looking at some of the themes. The yen has been in a lot of focus the early part of the year, and this morning as particularly. There's a lot of apparent options activity going on in yen pairs, dollar yen, mainly to the downside. A lot of interest in the downside for dollar yen. I did put a couple of bits in the newsroom on our chat room this morning, so if you are in the room, check those out. But it's really been a bit how I've expected it to gone this morning, coming into the first real trading day. Obviously, there's been a lot of messing around over the new year. We saw dollar yen, for example, running up 134.5 into the end of the new year. Then it's been downhill ever since. So what I've been looking for is basically a continuation. As we said, that last busy week up to the 16th of December, we had all the central banks. We knew what everyone was doing. Then we had the Bank of Japan with their little tape bomb, let's call it that. So it's really, are we continuing that theme coming into the new year? And it seems to be the case. Further news coming in from the Bank of Japan, potentially looking to bring their inflation forecasts closer to 2%. That was a piece out in the Nikkei a couple of days ago. They see, this is a sources piece, they see the fiscal year 2022 inflation at 3%. So obviously that's the year we're just in at the moment. For financial year 2023, they see it at 1.6% apparently, and it's going to be nearly 2% for fiscal year 2024. Now, that's hardly rocketing inflation on their metrics, getting to 1.6% in the next fiscal year and nearly 2% fiscal year 2024 is not exactly inflation levels like we're seeing elsewhere, but it is a subtle shift if it happens, if they do raise these forecasts, because then it does potentially get the market thinking about a change in policy for the Bank of Japan. And I think that's still going to be the big thing that's going to play through the early part of this year. Now, a week after the Bank of Japan, we did get their summary of opinions. It's almost like the minutes, if you like. And they maintained that the yield curve control is needed for inflation to stably and sustainably hit the target. And that they must maintain easy policy as Japan is in a critical phase in hitting the price goal. Japan is showing signs of wage rises and a positive economic cycle, but it's appropriate to maintain easy policy for the time being. And they were very heavy on the reasons why they moved the YCC, and that was because the bond market functioning is worsening, which, if continued, will disrupt positive effect of Bank of Japan's easy policy. It was appropriate to widen the yield band due to concern over the negative impact on the bond market from yield curve control, and that they were at pains to say that the widening of the yield band is not a shift from loose monetary policy aimed at making current stimulus more sustainable. So they were going heavy on why they moved the band. It hasn't changed the market's view, and there's now a growing anticipation that they will be tightening policy or looking to tighten policy. Whether they do or not, we don't know. We're going to see what these wages do in the first quarter or end of the first quarter. All these wage negotiations that are going to happen. We're going to get all the new fiscal year forecasts and all those sort of bits and pieces. and we'll have a better idea whether that is potentially going to lead to them moving further towards tightening. So again, looking at what's happened in dollar yen and yen pairs in general, it does seem that the market has got this bone in its mouth. It's not ready to let go yet. That the Bank of Japan may be forced down the tightening route, and so we are going to see a continuation there. Then we're going to throw in obviously what's happening with the Fed. Are the Fed going to get their soft landing or hard landing? What's it going to mean for jobs? Are we going to start to see jobs going south and a harder recession coming? Or is the US going to escape it and have this soft landing, which means that policy may not be coming down as fast later in the year as some expect, and they may even reach their target ceiling that got adjusted up at the last FOMC. So all these themes are going to come into play. If it is looking bad for the US, if it's looking like a harder landing, and we're going to get the Bank of Japan potentially moving towards more tightening or further tightening, then obviously dollar yen is going to be the key pair to play, and we're going to see some decent downside coming into that one. So that's what I'm looking for this pair just in the early exchanges this morning. China is obviously another big story that's rumbling on, and what's happening with the COVID situation, this big wave of infection sweeping across the country. We don't know exactly how bad it is. Some sources out of China saying that hospitals are packed out. There's queues for crematoriums, that sort of thing. It's a bit of a shaky situation, a bit like we saw when the pandemic first hit countries like Italy and the likes way back in 2020. But on the other side, we've got apparently the European Union is offering free vaccines to China. So there is an effort perhaps to step up to the plate and help out the Chinese people. So we have to see how this pans out and whether it's going to affect activity in China, whether it's going to affect the economy. Maybe it's going to be a short-term blip. Maybe it's going to be something longer. So that global growth picture is something that's going to be heavy in the early part of this year. Now, there was a bit of positive news that a Chinese ambassador who's in Washington got promoted to now being the foreign minister for China. And he's vowed to prioritize US ties, and was very uplifting in his comments for Americans, saying he was deeply impressed by the American people and pledged to continue to push forward the relationship between the two world powers. Again, this is another thing to watch early in the new year. We've obviously still got the Russia-Ukraine situation ongoing, but tensions have still been there between the US and China, Taiwan in the mix as well. Are we going to see a bit of a thawing in relationship there? If so, that's going to be good for risk. That's going to be good potentially for economic activity if ties are maintained and increased. Or conversely, if things go south again in relationships, maybe China does something with Taiwan, it's going to lead to a big risk off and all sorts of problems. So these are really the big global themes we need to be looking at in the early part of this year. I am going to be doing a blog post later. I'm going to explain some of my thoughts for 2023. But I did mention it on F.A.C.E over the holidays. I think one big thing we need to look for going into this year is potentially more central bank divergence, or bigger central bank divergence. For the last year, all central banks have been pretty much moving in the same direction. Some going at different speeds, but we had a big hike cycle last year that petered off towards the end of the year. We've still got some banks hiking, some banks slowing, some banks taking their foot off the gas, some banks still hiking away. You look at the ECB, you look at the RBA slowing a bit, the RBNZ going full tilt, Bank of Canada maybe taking their foot off the gas. I think one of the big trading moves we're going to see is going to be more in the crosses and the divergences between the close currencies. We've seen the example of Aussie dollar Kiwi. That is a real, for my mind, a real big blueprint, if you like, on seeing what's happening with central bank divergence. With the RBA slowing, the RBNZ going still going full tilt, it seems. That's where we're going to see some of these trades coming in. The ECB stepping up the rhetoric versus the Bank of Japan possibly tightening. So a lot of the cross pairs, I think, are going to be needed to watch more importantly than some of the majors, because we could see those moving more than the majors. As I said, for example, euro yen could be a bigger mover than euro dollar in the early part of the year, as the central banks start sorting themselves out and we get these different rate moves and so on and so forth. What are you guys thinking for the new year? And Kay, I see you've just managed to get your arse in gear and get on. What you were trading a bit over the holidays? Did you see anything of note?
Yeah, hello everybody. Happy New Year. Wishing everybody fun, good health, bags full of pips. Yeah, no, I agree on the cross side. There's going to be some decent, probably central bank divergence to be traded or not. And since the market is gearing up towards the Bank of Japan changing tack, could be some decent trades in there, and perhaps at some stages, if ever the Bank of Japan fights a little bit against the market, saying that they are not going to move that fast, it could actually reverse a bit. But yeah, start of the year, it's been quite a bit of dollars being bought back this morning. And I must admit, a bit surprising, because we've seen this big rally on the US yields into year end, and now coming back down. The EU versus US short term is not really moving much, but yeah, we saw a lot of dollar buying here. Is it gonna last? I don't know. One of the themes that I saw is possibly trading US recession, but as we have been saying already here, it remains to be seen whether it's going to be a soft or a hard landing. It's going to be an interesting. I think for a starter, what we're seeing today is telling us that the dollar isn't dead yet. And I think that's one that I'm going to keep a very, very close eye on, especially in a couple of stuff. Like if we expect UK, for instance, to continue to find it a hard life, cable may provide how shall I say, opportunities to get perhaps a bit short cable on decent bounces. Yeah, as you say, crosses. And if we get a soft landing, then stuff like the carry trades, for instance, could make a decent comeback. Thinking of Euro MEX or MEX yen, yeah, just MEX versus something that is perhaps a bit weaker. If you want to go really exotic, long MEX, short China, maybe one that I'll be keeping an eye on. But yeah, for the start of the year, I'm going to be rather watching a little bit of what's going on. I think the crosses like yeah, the Aussie Kiwi, Euro Sterling are still going to be interesting. Although the Aussie Kiwi is usually a slow mover, so we need to be a bit patient on that.
Yeah.
So yeah, that's looking at what the market wants to do, and then see if there's a good trade to be done on the back of it or counter it. This looks to me like first day of the year, European asset managers buying back dollars that they probably sold at the end of the year. So that's what's happening now. Where is it going to take us is a bit of a question. And I think already this afternoon, with the States coming back online, we are going to see whether the dollar can really hold its ground. And then the other ones, I think if we get into soft landings and central banks starting to stop hiking, and that's a bit further down the road, perhaps the metals are going to be the ones that are finally going to take off this year. That's something that I'm really watching very, very closely.
Yeah, definitely, mate. And I've got the same view. You know, this is really the first full day back from the new year, and we could just be seeing, as we often do. We said before the year went out, watch for traders closing off positions for that holiday period, then re-establishing them as they come into the new year. That could be what we're seeing. We're seeing dollar strength here, but it's coming while we're seeing yields dropping back. Usually that's not a picture that goes hand in hand. You'd expect something else, and stocks are rallying. You look at stocks in the UK, Europe, big rallies there. So it's not a day I think you can look at today and look at these moves and think, oh, okay, right, this is how it's going to be for the next few weeks.
And for those who were there over year end, we saw exactly the opposite move.
Yeah,
we saw the dollar not benefiting from lower stocks and much higher rates. So this move today is really a counter move of what has been seen over the last week or so. The only constant, I would say, in the whole picture has been euro sterling holding up very well, and that is still one where I'm in, and I expect to go a bit further on ECB. Bank of England divergence, I reckon we can see a bit higher levels, but I'll let Stel perhaps comment on his view.
Yeah, I agree with that. So, I mean, the main warning for today is don't get too sucked into these moves. This is the early part of the year. People are jockeying around, getting repositioned. You've got to probably give it a couple of days before you start to think of the themes. And on that point, we'll bring Stel in for your thoughts, mate, coming into the new year.
Hello, everybody again. I definitely agree on the euro pound. I'll start with that because it's the last thing you talked about. I think the central bank divergence between Bank of England being more dovish than expected and the ECB being more hawkish than expected is going to drive it probably higher. I've been saying this for a while, and I think the first target is 90, and I think we're going to get there relatively quickly. After that, it's going to depend on a lot of things, but the range between 83 and 90, or 82.5 and 90, is pretty important one, and that's the one I've been playing for months now. And so that's my view on the euro pound. In general, I think there will be a time to be really bullish on the pound, but at the moment, central bank divergence. Also, we're still seeing the aftermath of the Brexit, the whole Brexit scenario unfolding. Also fiscal, political situation really not great at the moment. So there's a kind of a triple whammy weighing on the pound. As I said before, there will be a time where I'm going to get very, very bullish, but not quite yet. I also agree 100% about the first few days of the year being driven mostly by flows. So don't put too much importance on them. I have to admit, I am a little bit surprised by the rally in equities. I thought that we're going to get a start of the year on the back foot. But again, like Ryan said, first few days of the year, don't put too much importance on the moves. I would let the market settle this week, and then we start looking at trends. Also, metals, you talked about them. I definitely look at those. I've said for a while, I think they have been outperforming over the past weeks. And I think they will continue to outperform. The problem is that anyway you read, everybody says, 2023 is going to be a year for gold. So that kind of worries me a little bit. But as I said before, I think inflation is going to start dropping, at least for now. I think now that we get end of Q1, when we start comparing year-on-year changes to the end of Q1 of 2022, which is when we saw pretty rapid rises because of Ukraine, because of a lot of things. I think inflation is going to start dropping quite dramatically. I think it's going to rise again after that. The thing, I actually joke about it. I disagree with Peter Schiff on a few things. So one of them is he keeps saying, high inflation is here to stay. I disagree with that. I think high prices are here to stay, but the rate of inflation is going to drop. I don't think we're going to see negative inflation, which really we should if we want things to go back to normal, but I don't think we will. But the rate of inflation I think it's going to drop quite dramatically. So I disagree with Schiff on that. But then I think it's probably going to start rising again. So I think we're going to see end of Q1, maybe for a few months, we're going to see really low inflation, and then perhaps it's going to start rising again. So a low inflation environment, probably combined with a turn lower in the dollar. I know it's higher today, but I think this is the last leg higher for the dollar. These two things are probably going to be a pretty powerful move for metals. And I am looking at 24.30. Obviously, probably not today and tomorrow, because we said, flows are driving a lot of things. It can be misleading, but the daily close above 24.30 in silver is a pretty powerful statement for me. And I still have half of my long from the kind of mid-20s, which is doing well. I did take off the other half, if you guys remember, a few days before year end at around 20, just under 24. If we do get a daily close above 24.30, maybe towards the end of the week, not today, tomorrow, I'm probably going to buy that back and keep going. So, I think. What do I think this year is going to bring as a whole? I think we're going to see lower inflation, as I said before. So this is going to give some support to risk assets. But before we see the lower inflation, I think we're probably going to have one final move: dollar higher, yields higher, stocks lower. I know we're not seeing it yet today. We're seeing dollar higher, stocks higher, pretty much everything higher. But I think we have one more leg before we start a proper move on the other direction.
Yeah, no, quite agree, mate. Quite agree. So it is obviously it is the first full week of the year. So let's have a look. We don't have. Oh, yes, we do have NFP this week. So it's going to be a pretty hectic week, probably from tomorrow onwards. We get some final manufacturing numbers, the PMI, the market, S&P Global from the US. And then we get into the ISM tomorrow, and then we have some jobs data, and then obviously we have the non-farm payrolls on Friday. So a big funky week for data this week, as you can see there as well. Eurozone CPI numbers, flash numbers coming in there. We have seen Germany regional CPI coming in much lower today. Some fairly sizable drops there. For example, Saxony year on year dropped to 8.7% from 9.9%. Similar themes going on there. This could be a bit of easing blowing off the top, but I agree with what Dale says. We may see inflation coming down, but I don't think we're going to see it down to sort of 2% or anything like that anytime soon. Sorry, mate, was you adding something?
Sorry, who, me? No, I was muted.
Okay, cool, no worries. So yeah, we have got a busy week of data coming up. So it's straight into it, all hands on the pumps, and we'll get stuck into that data this week. Kay, you got anything you want to look at in particular?
No,
today?
not really. I can share a screen because I see where the 24.30 is on silver, but I have an interesting channel there where we just tagged it up today, and that's around just in the 24.50s. So if you want, I can just share just a couple of things.
Go ahead, mate.
And perhaps still can actually.
I was just looking at the previous highs from December.
Do you see my screen?
Okay, yeah. I can, yes. Yes, okay. I see that.
Just tagged it today. So and I took a little bit of my holdings off, looking for a potential dip. It could already be enough in the 24s, but this has been watered down. Forget about this one. I'd be looking at like 23.85 perhaps, and really getting very interesting if we get back down to low 23s, and if we say that, or if we assumption is always a big word, but if we think that the dollar can make a little bit of a comeback at the start of January, it is possible, because silver moves quite fast, that we are going to get a look back into the low 23s, where I would get like really interested to rebuild at least what I've sold over the festive period and early in the morning. Same thing on gold. We tagged the high of this channel that we've been building since November. So this one is a pretty interesting level, 18, call it 1850. And on the downside now, still this zone 18, 28, 35 to watch. We are right back on it. If we get a move back down, perhaps we can have a chance to get some back around the well, for those who want to buy around the 1800. I may actually try to catch a knife if we get down there.
You know what, Cayman? You're right
yeah.
about that trend line resistance. So 2450 is the level for silver. You're right.
Yeah, somewhere around there, right?
And by the way, if we do fail to break that, I will be looking at around 2220, 2230. I think we're going to go. I don't think if we fail there, I don't think we're going to stop at the low 23s. Just
right.
Just
okay.
to let you know what I'm looking at.
Yeah. Right here then.
Yep, exactly.
This zone, right? And
yes.
This is a pretty interesting little zone here, 22 and a quarter. Yeah, low 22s. Low 22s. Yeah, why not? It's all possible. Yeah, euro sterling still long. We moved out of the channel really sideways. Still this first support zone here, which is just above 88 level, call it down to 88, 88.10, 88.25 has been holding pretty well over the end of the year. So that's the first level to watch. I'm not really heavily in it for now. I still keep like a core long, but I'd be rather interested if we ever can make it back there somewhere around mid 87s. And this is now the big danger zone, 86, 87, the figure 86, 85, I think. If ever it goes back down there, then something different is happening, in my opinion, because we have seen this zone really being quite important. So this is one really to keep in mind if euro sterling starts to come off a bit more. I don't know if we're going to look at a lot more today, Ryan.
No, don't need to, mate. Well, unless anyone's got any particularly they want to look at in the chat, let us know. But yeah, I'm just I'm playing a bit of catch up today, actually.
Yeah. We still are. I've been up for
makes sense
as well. Yeah,
yeah. I've been managing some of my positions. I'm still short dollar yen from up 136, 135.
Yeah, you're still well there.
Yeah, really well it was that late. It was the Bank of Japan that caused me to hold it. I was looking to perhaps exit out of a few bits and bobs, but we got the moves, and I don't like giving up a winning trade.
Really well.
So
nicely played, man.
Yeah, cheers, mate. So I'm going to look to continue that theme. I'm still long, small euro sterling from the 86s. Again, happy to sit on that. Aussie dollar, I thought that was looking a bit prettier this morning when it was trading above 68, but as we've seen, it's now down at 67. So
yeah, dollar's really getting a lift there. For those dollar yen, then in the really short term, I'd say watch this the high of the overnight 131.38 ish, 131.60, 131.40.60 is where the first intermediate resistance lies, in my opinion. There's going to be bigger ones on the way up, but what we've seen towards the end of the year, and if you look at the 28th here, we just tagged this prior low, and we said it like 134.5 is about the level where it should cap, and it really capped right there, and then we did this another 500, nearly 500 points lower. So that's going to be the big one. In the more medium term, call it 134.5, 135 perhaps. And if 135 starts to go, then I think there's room to get back to higher levels. But in current context, I don't think that the market is ready to see such a move develop. And with that, I'll pass it back to you, my friend.
Yeah, thanks, mate. Just a quick one on dollar yen. Let's get my screen back up. 130 was obviously one of the psychological areas to keep an eye on. There was some barrier action down there. the time and when it cracked that could have been just some early morning, maybe some Japan coming back, because I think they were on holiday yesterday as well, weren't they? So 130 is probably the consideration again, even after we've had that move lower underneath it this morning. So keep an eye on that area there around the 130s. We have got a big fib coming up. One of the big fibs, 128.89, so close to 129. That's in range. As you can see, we've got some big, I'll leave it on the daily, we've got some big fibs there. The next one under that is the 50 fib of the move from 2021 at 127.26. So this area of traffic around here could be pretty interesting to keep an eye on if we do break lower. If we get and hold under 130 in dollar yen, I think we may be heading down to the mid 120s at some point. But lots to happen, lots of water to go under the bridge.
Actually, Japan is back tomorrow online.
Is it tomorrow? I knew they were on holiday an extra.
Yeah, they were still closed today. There was like this 4-day period where they close around the turn all the times every year. So they're back online tomorrow. So tomorrow we'll know what the Japanese want to do with their currency, at least to start the year.
Cool beans. Right, well, if you want to get your year started off on the right foot, there's a couple of things you can do. Obviously, join the ForexAnalytix platform. I'll pop the live link in there for you guys there. It's going to be a great year for trading. I think there's going to be lots of volatility going on this year. And that's what we want, a lot of volatility for our trading, as long as it's good volatility. And we always like to be greedy on that front. But also, you can take part in the Traders Funding Program if you've had a good year or reasonable year, or you want to increase your year even for this year and increase your trading. Take a look at our Traders Funding Program. You can access that also from the forexflow.live site. Don't forget, just to go back to the chat room, if you want to join, you can get a 20% off your subscription. That lasts for the lifetime of your subscription. And for the funding program, you can also check out the link there if you want to scale up. We've had a lot of successful people coming through, particularly towards the end of the year, passing the assessment, getting their trading account, making money, and withdrawing funds from that. Still, we've seen quite a few people taking some money out. And we haven't been running this that long, so that's been good to see.
Yeah, we actually had 3 people pass the assessment in the last week of December, when I thought people would be basically eating and drinking. But we had a few people who pass, which was really great. One was a very large account, so yeah, there's a lot of action. And when you do take a trader funding program account, you do get access to ForexAnalytix and the chat room and all of us basically. So, it's a community and we're there to help each other. And I think that's really a great asset to have and a great plus when you get the funding program account.
And I think it's also important to highlight that your risk for the whole thing is only the evaluation fee. So
yes.
If something happens, if you blow your money, if there's a black swan event, you may lose what's in the account, but you haven't physically lost it. The most you will ever lose is your evaluation fee. So that's
exactly. It's like buying an option.
Yeah,
so you buy an option with potentially unlimited upside. Depending on how you trade it.
You get $100,000 account. It's cost you $1,000 for the evaluation fee. You turn that into $1 million, and something happens, and it goes negative $1 million. You don't lose that. You just lose your $1,000. So think of that as a low risk trade, if you will. And if you want to look at that for the new year, no better time to do it than now. And on that note, I think we should call it a day. I've got a lot of stuff to get into, sorting out the kids and whatnot. Back into the new year. I wish it was Christmas. Only 356 days to Christmas, folks. So on that note, we'll call it a day. Thank you very much for coming to the Flow Show. Wishing you again a prosperous 2023. We'll be back tomorrow and we'll get stuck into the nitty gritty of things. Thanks, Kay. Thanks, Dale. See you all tomorrow.
Yes, guys. Have a beautiful year, everybody.